back. Here we're talking about bonds, government bonds, South African government bonds. What an interesting topic in this environment. NewFunds, which means Absa Bank or Barclays Capital, Government Bond ETF, NFGOVI or NFGOVI, I suppose would be the right way to say it.
Yeah.
It tracks the total return version of the GOVI Index. Nerina's going to explain what the hell that means in a minute. Of course, these are bonds issued, as I said, by the South African government, where the Treasury, the Republic of South Africa Treasury, makes the primary market of those. 429 millions or thereabouts worth of issuance. Of course, the bond market itself is multiples of that, but this is just a tradable instrument on the JSE that lets you into that world. It yields a very low 1%, which doesn't make sense to me because government bonds yield higher, but you've got an explanation for that too.
It's all about that total return thing. So it's about the fact that all the coupons that are received from the underlying bond investments are automatically reinvested for the investor, and therefore you see the price or the net asset value increase. So the benefit of that is if you are an investor that are not wanting to spend the money of reinvesting those dividends all along, this is a great one. In international terms, they refer to these as an accumulation fund. It's one of few that we have on the South African market. Dividend withholding tax makes it a little bit difficult, I think, for the ETF issuers to decide on accumulation or total return versus just tracking the capital, because how much tax should you withhold or withhold? It obviously depends on the investor itself. So a little bit more tricky to manage from the issuer side, from the investor point of view.
Explain that. So they have an entity which owns that suite of bonds, and then they just roll it up themselves. So where does the tax get paid or calculated anyway?
So because it is and it might be an interest withholding tax, or it's an interest tax that needs to be paid. But as the dividend that is declared is paid out, is not paid out to the investor, that tax has to be recouped in some way.
So they just let you know in the annual reports what the cycle information has been.
Absolutely.
Okay, but let's go back to the real world. What's going on with South African bond issuance? Now we've got a high and rising debt to GDP, which is indicative of the fact that there's been quite a lot of additional issuance, or at least spending, which has not been met with the corresponding tax revenues.
Indeed.
But now that's sort of changing. I don't know if it's really changing
I guess
or
we'll
not.
see next week with the budget to see what is that shortfall in the budget deficit, because ultimately the budget deficit can only be funded by
let's say
debt.
that they announce an increase in VAT and a curtailment of spending and so on. That would be positive for the bonds, because then people would be more confident, right?
It would be positive in terms of the amount of new issuances that would be required. The major concerns around bond at the moment does relate to South Africa's sovereign credit rating.
That's a good point. So if we get a debt downgrade, then these things are going to go down because the yields will rise.
Exactly.
Because lots of people will be obliged to
sell it. And if you look at the experience that they had in Brazil last year, and to some extent also in Russia, where they've also had a downgrade of their sovereign rating, this gives us a bit of a blueprint to see what can we expect in the likely event of South Africa being downgraded.
And I've been hearing people have been saying that some of these instruments have been trading in anticipation, or as though we've already had one. So if you are of the view that we were going to come through smelling like roses, South Africa's going to snatch victory from the jaws of defeat, no downgrade, then you would want to buy this one.
Absolutely, you're spot on. You know, so when we look at what happened in December, we had a significant spike in our bond yields.
From the chart of this thing, if it's
so in the government yields, massive spike in December. It recovered somewhat, but it's been drifting since then again. So, you know, how much of it has been priced in and how much not? And here it's very much, I guess, a trading view. Do you believe that we'll get the downgrade or not?
What's your trading view?
My view is that we will get the downgrade, that we will not be able to avoid it.
When?
But we're looking 12 to 18 months hence. And I do think that there's still a lot of selling that
there's
needs to be
potential,
done.
like Moody's, there's 2 notches to go before we go
Plus, in
underwater.
the case of international investment mandates, they require 2 ratings agencies to downgrade us to below investment grade rating. So even when the first one downgrades us there, we still need to wait for the second one. But that's when you will see a lot of the preemptive selling.
So hang on, just capture that again for me. So you're saying you think there's a real chance that we will be downgraded, but not like next week?
Not immediately, no. So this is probably a 12 to 18 month scenario that a lot depends on what happens in the budget next week, but I don't think that there's enough that government can do in the current global economic climate to really sort of stem this. They would have to make some fairly major policy changes around government spending, a real implementation around the NDP, the National Development Plan, and so on, in order to avoid this downgrade. I do believe that it's largely inevitable.
So you're not hot on this one?
I'm not hot on this one, no, definitely not.
Okay, well, I'm not going to be too contrarian. I'm generally fairly confident government will do what it needs to be doing, but of course, as Nerina says, that's going to be something that evolves over time. Okay, so I'm not hot on that one too.